Inflation reports in focus this week. Joining us now, Bob Michele, Chief Investment Officer and Head of the Global Fixed Income, Currency and Commodities Group at JPMorgan Asset Management, where he oversees more than $800 billion in assets under management. And given your expertise, you can, we can look at fixed income, commodities. We just talked about, where you hang your hat. You should be the perfect person to let us know about inflation and whether it is there some new incremental inflation being added? Is it the same inflation that we didn't put to rest in the first place that's rearing its ugly head again? Is it some of both? Is there a reason to worry? Bond market doesn't seem to say. What is your analysis, taking all things into account?
Well, inflation was on a pretty good path. There was disinflation in place. Prices were coming down, not quite at the Fed's 2% target, but getting there. We're going to get some inflation data this week. It won't matter in the least. The market's going to look right through it because right now the market's concerned about the impact of tariffs. How much is it going to take off of growth? What does that do to the probability of recession? And right now the market's pricing in a higher probability of recession and not so much the reset in prices from tariffs.
Okay, so if there's something to really be concerned with, it's not the tariffs causing inflation to suddenly spike higher again. It's a growth worry.
What's causing the growth worry? What's causing the downturn?
Well, there's a sense that we share with the Fed that rates are still too high for this economy, that the neutral rate is not 4 3/8%. It's probably not 3% either, but it's somewhere in the middle.
But what's causing the slowdown?
The slowdown? I think just the extent of time. There's a tiredness by businesses and households. They look in pretty good shape, but we're already starting to see profit margins in corporate America start to come down a little bit. And I think just the uncertainty over policy is starting to give consumers and businesses a chance to pause.
But is the uncertainty over policy tariffs?
It's that, and it's the volatility of everything else. Last month, it was on immigration policy. What would that do to wage costs? Next month, it could be the Tax Cut and Jobs Act. It's just policy uncertainty. Markets don't like it.
Doge, too, right?
Could be. Could be.
So all of this, though, the hope is it's a short-term game, Doge and all these other things. Do you see, though, the other side? Do you see the rainbow on the other side of this?
I do.
You do.
It feels to us like the nasty stuff is being tackled first. Immigration policy, tariffs. The other stuff could be positive. Deregulation. There's a benefit to that. An extension of the Tax Cut and Jobs Act. Right. Do you need to hang more off of that? That's the kind of thing the markets will like.
When you talk about deregulation, though, do you see, we were talking about mergers and acquisitions, for example, there's a real question about, how harsh this FTC is going to be. I know Lena Khan's no longer in the job, but some of the commentary and some of the deals that have even been blocked recently.
But deregulation, that's only 10% of what deregulation delivers in terms of benefits. I don't. When I hear deregulation, I'm not immediately hoping everybody's merging.
I understand that.
Permitting and just it's just
100%. But it's very hard to quantify what the quote deregulatory landscape fundamentally does on an economic basis, right?
Because
it not only does it sound good, it should be good.
I'm not immediately thinking banking fees for all these guys on Wall Street. That's the only thing that deregulates.
By the way, but bank stocks moved on the back of this.
And other things, and other reasons for deregulation, not just a million things that would be better for banks. Basel III, capital requirements across the board.
But a lot of it was that there were going to be smaller banks that would be able to merge themselves. There was going to be M&A activity like crazy. There would be IPOs. There would be capital investments.
I think deregulation,
all of that was going to be
financial stakes
minuscule. M&A is minuscule for the benefits of deregulation.
Take M&A out of it.
The financial stakes will move based on what the fortunes of the country are.
I just don't think you can use M&A as a gauge of whether deregulation is going to be bullish for the economy.
Well, look at the banks. Banks are holding a lot of regulatory capital for the Basel III endgame. If that's truly ended, then that's excess capital that can be pushed into the system. can be returned to shareholders, can be extended through credit in the system. Think about the energy industry. Yeah. How do you incent producers to produce more energy? We started with inflation. You bring oil down to $50 a barrel and gas below $2 at the pump. That's pretty good for the consumer.